All right, of course, we start with our breaking news story. South Africa's economy has shrunk in the second quarter of this year. And we have eNCA's business anchor who joins me now for more. Rafua, as expected, there was no growth in the second quarter of this year.
Yes, as expected indeed, Masach, and I'll tell you why. The big components here were the flooding in KZN as well as the blackouts. Masach, I think many of us don't realize how much of an impact the blackouts are having on key sectors in the economy. But let's give you guys a sense of what the economy looked like in the second quarter of this year. So if we take a look at quarter one of 2022, that was some significant growth. We had come out of a low base from the pits of the pandemic, but we were able to come back and rebound to about 1.7%, and that is the revised figure that has been given by Stats SA. And then as we speak about today, the period between April and June this year, that being the second quarter, that declining by 0.7%. Two major components to take into account in this particular situation. We had the KZN flooding, which lasted weeks and decimated many critical areas of that province. You will remember that KZN is the hub of many of the manufacturing businesses in the country, those that drive economic growth, notably the likes of Toyota, Tongaat, Hewlett, and many others. So those businesses severely impacted and unable to contribute to the economy in this period. Masako.
And Rafua, I think a lot of us will be surprised about this part of what you're going to tell us in terms of the industries that shrunk. I mean, some of these industries I was telling you earlier were the ones where we used to thrive as a country. That's
absolutely right. Let's actually bring that graphic up, Masako. Let's give you an indication of those. Look at that, Masako. You're absolutely right. These industries are the bedrock of South Africa's economy. But over the last few years, actually, they have been struggling. The notable ones are construction. Mining and quarrying was actually one of our biggest ones over the last 2 years, given the price of commodities that we're seeing. Agriculture, manufacturing, not doing too bad earlier on, but really reeling from the effects of the blackouts that we've been getting. So like I was indicating to you a little bit earlier on, a lot of us don't understand the impact that the load shedding has had on key industries in the country. And then when we focus on construction, what business in South Africa has been waiting for is for government to start on its infrastructure spend. There have been talks for months now about investing in the infrastructure build in the country, and that is the one thing that would boost not only the construction sector, but create the necessary jobs that we need. And then another one, which is almost like a low-hanging fruit when it comes to economic growth, is trade, catering and accommodation. That down by about 1.5%. Obviously, it's a reflection of the pocket of the consumer and them not being able to plow back into the economy through different services as they usually would. Now, let me show you one other indication when it comes to why we are unable to create growth in the country. It's that jobless rate number there on your screen at the moment, 33.9%. That is the conservative number of unemployment, and the expanded definition is around 44%. And in order for us to bring down the jobless rate in the country, we have to, according to the NDP, the National Development Plan, create a GDP growth of an average of 5% on an annual basis. And as you've seen, South Africa just hasn't been able to do that. So that is the lay of the land when it comes to GDP in South Africa at the moment. And unfortunately, it doesn't give us an overall positive look as to the annual that we will be seeing later on. Let's bring in Stanlib's chief economist, Kevin Lings. Kevin, I've just given an indication of a breakdown of the numbers that we saw. It was expected that we were going to see a bit of a downturn in the second quarter, and I mentioned the effects of the flooding that happened in KZN, as well as Eskom's inability to keep the lights on throughout the country.
That's right. Those two factors, I would say, probably explain most of the decline that we saw in the second quarter. And unfortunately, it was a very broad-based decline. So we've lost momentum in a number of key sectors. I would just flag manufacturing and retail. That hurts this economy because together with finance, that's really the essence of what the country's about. The mining industry they're generating great revenue in terms of the price they're receiving, but obviously they're struggling to get more volume, partly because of electricity, but also because of what's happened to the railway lines as well as port capacity. So this economy feels like it's weakened on a broad basis. The other thing I think we've got to be very mindful of is that inflation is above wages. So people's income is declining in real terms, and we've got higher interest rates. So it's not as if the weakness is purely attributable to the floods and to the load shedding. I think there are other factors that are also impacting. We know confidence in this country is exceptionally weak. We're desperate for new fixed investment. So it's a range of factors undermining SA growth.
Mm-hmm. You speak about key investments that need to be plowed into the economy, Kevin, and I mentioned while I was giving a breakdown of the numbers, government's infrastructure build and really just the pace at which they are starting different infrastructure projects in the country. That has to be a cause for concern, because that's one of the more easy ways to create employment and to get money circulating within the economy.
I 100% agree. And it's also one of the areas that we need the most, right? So if we look at infrastructure, whether it's business infrastructure, social infrastructure, it's been under enormous pressure. And it's very difficult for an economy to be vibrant without the appropriate infrastructure. And that goes beyond simply saying it's electricity. If we look at the water system, the sanitation system, if we look at healthcare, education, all of those need renewal. And if we were able to undertake more investment in those sectors, it's got beautiful knock-on effects, benefits to other industries. Manufacturing would be helped, the transport sector, finance, all of the associated industries would derive a huge benefit from an uplift in infrastructure, and clearly there would be an increase in employment. So it's the obvious area that we need to focus on. Government knows that. That's part of government's policy. It's all about implementation and drawing the private sector into some of those projects. Hopefully that starts to improve later this year, and probably realistically more next year.
Mm-hmm. Now, given all those things that you've just mentioned, Kevin, the higher inflation that is continuing to put pressure on the South African consumer and pushing the SARB to keep increasing interest rates, as well as the outlook that you've just painted for us, what does this indicate in terms of what we're likely to see as an annual growth number at the end of the year? Is it something positive or something indicative of growth coming in 2023, or should we just kind of leave it as something that we know is going to be quite low for a while?
So I think, unfortunately, it's going to be low for a while. I think for this year, you're probably looking at something less than 2%. At the moment, I've got 1.8%. You can argue at least it's positive, but as you mentioned previously, you need growth rates up at 4-5% to make a real difference to this economy, particularly to the labor market. So if we're growing at 1.8%, it's not enough. For next year, we've got a similar type of growth rate anticipated, although I do expect that during the course of next year, the second half of the year will be better than the first half. And the reason is, I think by then we'll see more evidence of the energy investment taking shape, and hopefully some other projects. So I think as we go along, things should get better. We're more optimistic about 2024, where we think the growth rate will be closer to 3%. So I think in the short term, by that I mean the next 12, 18 months, it's going to be tough. Economic conditions are going to be challenging. Inflation will still be problematic. Interest rates will still be high. But hopefully beyond that, we start to see we start to experience more optimism, and we start to see more infrastructure investment taking shape and starting to change the outlook for the economy.
Kevin, as always, thank you very much for those insights. That is Stanlib's chief economist, Kevin Lings, breaking down the GDP data that came out this afternoon. And you heard there a little bit of a grim outlook from Kevin, in that things are going to remain subdued. Interest rates are going to stay high, and we're going to be paying more for basic goods and services until at least 2024. Unless something drastic is done by government, Masego. Drastic. Get those infrastructure projects into the system.
I thought we've reached our peak already with this, and that we're going to go down soon. It's so bleak. Okay, you know what I'm going to do? I'm just going to hold on to the fact that at midnight tonight, I'm paying about 2 rand or almost 3 rand less a litre for petrol. Let me just stick to the good news, and I hope the viewers will also do the same.
Small wins.
It's the small wins. All right, Rafia Matsena with our business report, and it's a bleak picture, as you heard.